Thanks, Frank. And can I just ask the other panellists to please come up? We're going to try to get back on time, so we're going to have about half an hour for our panel session. So panellists, please come up, take a seat, grab a microphone. I'll just introduce our panellists. The first is Excal Roland. He's a Sustainable Development Manager for Fresnillo, in charge of company-wide corporate social responsibility strategy and sustainability reporting. I have Michael Behrens, Head of Carbon Sales for Clear Blue Markets. He's an expert in cap and trade compliance strategy, offsets and carbon trading. He has over a decade of experience in carbon markets, having worked at Vattenfall Energy, trading Barclays and Eco Securities. And George Shield, who's the Electrical Engineering Superintendent for the De Beers Group of companies. Over the years, George has always had a focus on safety, health and environment. He also has been a management representative on more than one joint safety committee over the years and has been responsible for complete sites from civil work to complete site maintenance. So let me take a seat and we'll start the panel. Grab a microphone. We on? We are. So we have a series of questions and I might go off script a little bit. Having worked myself in Australia where we've seen a carbon tax, which was then removed, so the market responded, the market had to backtrack. What would you as a group like to see from a carbon pricing mechanism, and what would you not like to see from a carbon pricing mechanism? So who would like to start? Maybe I'll start with you, Frank.
Okay, can you hear me? Yeah. Okay, thank you. So we mentioned this a little bit before in our discussion, that I think stability is an important thing for the mining industry, and so coming up with a cost that doesn't change dramatically from year to year, I think is very important. Another thing that, much like the International Council on Mining and Metals, we would like to see that tax not be used for revenue generation, but that it be used to invest in innovation that will assist all of the heavy industries that are using power.
That's a very good point, actually. Excal?
I think it's very important to have consistency in all regulations. Beyond carbon prices, we need regulations that are coherent. In Mexico, we're developing, as a country, a lot of regulations to catch up, but it's important for the companies to have some clear long-term perspective from policymakers with respect to carbon prices.
Michael?
I have to fully agree on the stability, having a long-term understanding of where the markets will be, how long they'll be there for. I think that's the most important. I think, as you mentioned in Australia, just the uncertainty of how long the carbon pricing will be there for causes a lot of issues and makes the hesitation to do anything actually in the market. And I think the other key aspect is maybe stay away from a tax and move into more of the cap and trade type of markets and linking to other jurisdictions, so growing the markets, providing more liquidity, and allowing for these opportunities in the market itself.
Actually, it's a good point that having that roller coaster ride, as I said in my intro, what it does is it just absolutely dampens investment. And some of these are long-term investments and they're just not made. Yeah. George?
Well, again, ditto on stability. Obviously, we need to know what the future holds when we're planning investments, that type of thing. The other key one, I would think, is consistency between jurisdictions to mitigate where companies look at relocating possibly if it's a smelting operation, that type of thing. We want to maintain what's in the present jurisdictions, not throw a curve in that may move business around to other jurisdictions.
And we've all mentioned stability, but if you look at the politics around carbon, they've been very unstable worldwide. Do you think stability is realistic? Anyone? George?
That's a tough question. There's so much talk and change going on, and we have the Trump government coming in as a recent example. Where's that going to go? Even within Canada, we have differences between the provinces and the federal, so it's definitely not certain at this point in time, but over time it's going to evolve and we'll level off on something.
I do believe it's realistic. I think it's the only reason why you see a carbon price in Europe today. The EU has been very strong in saying that there's going to be a market post-2020, there's going to be a market up into 2050. If it wasn't for that strength of saying this is going to be the case, the price would probably be close to zero right now in the EU. So having that understanding has allowed the market to continue as it is.
So we've seen Brexit, we've seen the potential breakdown of the European Union. What, is thinking pragmatically, would a carbon mechanism survive that sort of breakdown?
The current understanding is that it will. There's been a lot of talk in the background of what will happen with the UK. I think the plan is to stay within the EU, the carbon trading scheme. At the same time, Switzerland is part of the scheme today with the EU. But interestingly enough, a few days ago, I think out of the current conference in Morocco, that Switzerland has announced their intention to potentially link with Ontario provinces. So I would expect that to be a step out of the EU and actually link with Ontario provinces, which is quite interesting, new development.
Okay. Let me shift the focus slightly back specifically to mining. In my experience, you get a wide variation in the response to carbon pricing from my mining clients, from they're not really interested through to it's absolutely paramount for their future. Do you think the mining and resources industry is alive to this issue? Exequal.
I think it's an important issue. We see a lot of sustainability analysts on behalf of investors. They are requesting information on your carbon resilience. So it's an inevitable question that every board of directors will eventually have to analyze. So from that perspective, as a mining company, it will be very hard to escape from this question. So all mining companies have an incentive to start thinking about their strategies. I think, and at least in the Mexican context, it will be easier to find alternatives for electricity to decarbonize our footprint. It will be more complicated to get away from diesel. So for mining companies like us, it's important to start working on the things that are available now.
And we've seen things like the Carbon Disclosure Project, the CDP. We've also seen various investor groups making commentary around that. It appears to me that at least from the money side of the business, there's pressure there. Do you think that pressure is real from investors?
It is. We get a lot of phone calls from analysts, and they are actually aligning their messages with some NGOs. So it is not only that one or a few analysts are concerned about the risk of their investors, but also they're having a tendency to merge their messages with NGOs. So this is something that has to be taken responsibly from a business perspective also.
So Frank, obviously Newmont is taking this issue seriously. Are you seeing pressure from financiers or investors?
No, I think Newmont probably feels more pressure from the sustainability and social responsibility sides that in many countries we operate, that social license to operate is really important. And we value being rated as one of the top mining companies in that area, in those areas. So I think there's a lot of corporate value that's been embraced. But I will say that if we look at the realities of how we plan, it's been much more evident where we've had to deal with carbon tax like Australia than anywhere else in the world.
And Michael and George, do you think, asking the question again, do you think the mining community takes this issue that seriously?
Maybe I won't mention the name of the mining company that I worked for, but I can say it. I joined them after 8 years of them being in the UETS, and they essentially did nothing with the carbon trading, to be honest. And that something I want to highlight is in a cap and trade market, especially, carbon price can be seen as an opportunity, especially for the mining industry. I think there's a risk of maybe moving too quick, too soon, because early movers can be penalized. So it's something I shouldn't want to highlight here in this conference about being progressive and moving into clean energy. But if you don't lobby correctly when a new market opens up, you can be penalized for being an early mover. Saying that, most cap and trade markets provide free allowances, like you'll see here in Ontario in January. And those free allowances are given to you, say, for example, here at the start of the year. But you won't need those allowances until 4 years later, at the end of the compliance period. And that provides an opportunity to sell those allowances, buy them back in a risk-free manner, and monetize those allowances, ideally to invest in a clean energy project. So the examples in Europe, most energy or mining companies had free allowances. Most didn't do anything with them. They sat on them because they just had them in their account and they didn't play with them. And I mean play in a financially prudent way. So the companies I work with, most of them didn't do anything with it because they didn't see it as a monetary value. But there is real value there. So there's not just a cost to it, there's opportunities. And if you're an early mover on the carbon trading side of things and you really understand the market, you can take advantage of this and make it a positive thing.
Which is a nice segue into my next question, which was about the real impact of carbon pricing on miners in terms of their operations and business, but also what does it open up in terms of possibilities, positive outcomes? Maybe, Michael, you can start.
Yeah, I think it's very interesting possibilities for these companies to be dealing in the carbon trading markets. We see the examples of the cement industry and the steel industry in the European Union surviving the last 10 years just on carbon allowances. Is that a good thing or a bad thing from an environmental perspective? That's something to discuss later on. But these companies made a lot of money, or they survived using those allowances in a proper way. And you can see this here, especially in the mining world, where you have many companies have locations within a cap and trade cap scheme, and also in developing countries where you can generate offsets, for example, and you can use centralize your position, centralize your sites, and take the opportunities in certain countries and bring them into your regulated entities. So there's a lot of opportunities there that especially mining industry has to look at.
And Frank, do you see opportunities like that also?
I think so. I mean, you mentioned offsets, and I know that in Australia we're growing eucalyptus-type trees, molly trees. I think we have something like 280,000 acres under cultivation now, with the idea that we can use those to offset some of the costs that we know are going to come as we expand our operations. But I think, we're considering things that we didn't consider 2 years ago, and so whether it's real, like we've talked about in Australia, or a shadow cost like we're considering in the United States, it does open new doors that we wouldn't have considered. And I think really the challenge for us is how real are these opportunities. We heard about some of the challenges for implementing renewables at mine sites, and that's really the resistance that our global team is feeling, is that the reliability and the storage capacity and things like that. The technical issues behind implementing renewables are really the bigger challenge for us, rather than the actual cost of the investment. We're going to make those decisions the way we always do on the financial side.
And Exequal, do you see any opportunities in responding to this?
Yes, for instance, Fresnillo operates in Mexico, and Mexico used to be a country with high prices for energy. But recently the government performed a couple of auctions, getting record prices on solar and wind energy. So mining companies will take advantage of this trend because the national grid is decarbonizing, but also because the new market mechanisms that will be in place will have the possibility to go and procure energy from different sources. This transition from a monopoly to a competitive market brings opportunities. Of course, as Michael mentioned, you have an advantage to be a company that starts preparing your strategy in advance before the market. But if one of the things that most mining companies are concerned about is cutting cost, at least in Mexico, energy will be one of those opportunities. And the good thing is that the prices of renewables are very competitive compared to traditional sources.
George, do you have any comments, opportunities?
Well, I'd just like to say for De Beers, we've been looking at this for a while now, and in Ontario, they implemented a rebate program, Northern Industrial Electricity Rebate Program. As a result, we have energy managers at each site, and we got a bit of a head start over the rest of the group. But right now, every mine has an energy manager focusing on eliminating waste, improving efficiency, which has a cost benefit already. So when you take carbon into account, it's that much farther ahead. So if you truly focus on being efficient, it makes sense for business anyways.
which is another segue into my next question, which is it's all very well to talk about carbon risk, but what are the practical ways of responding? Now, Frank, you mentioned a couple in your presentation. One of them you've just mentioned is energy efficiency, which I don't see a lot of. What's your response to that?
Types of efficiencies? What I've found on our site is it was a newer, we're roughly nine years old, so it was designed to be fairly efficient in the first place. Our biggest gains were mostly through procedural change, not technology. And if most people can relate to, you build safety as a culture if you want to have a good safety track record. What we've done is looked at energy the same way. We make it part of our culture, no different than safety. So everybody's thinking about it. And once you get that momentum, it's amazing what ideas come up to, why don't we do this different? So there's lots of easy gains there.
Can you give us a practical example?
Practical example, analyzing the type of teeth on your loader buckets based on the ore. We made a change, had significant savings on fuel. Real easy one.
Anyone else like to comment on that particular issue? Frank?
Yeah, in terms of energy efficiency, certainly whenever we put in a new mill, we're looking at VFDs, for example, as one way to manage the power utilization and demand of that equipment, which is a heavy draw on our plants. And I think we've really kind of ignored some of the common low-hanging fruit. Like, I walk around our mines and I'm always surprised at how little LED lighting we use. But we operate 24/7, and so that has a cost. And we do have a process that's meant to continually improve, but you don't see some of those simple things. You see the really expensive high-end equipment where we spend more money on investing in something that might reduce costs and increase energy efficiency.
So there's energy efficiency, there's displacing energy by using renewable energy. What other things, what other practical measures can miners take to deal with their carbon? You've talked about offsets. There's all various forms of offsets. Anything else that comes to mind? Like dealing with fugitives, fuel switching, electrification. Are these real in the industry?
Fuel switching is our biggest initiative in terms of changing our carbon footprint.
So what do you mean by fuel switching?
So going from coal to natural gas, for example, in our power plants, going from diesel to natural gas, those bring immediate impacts in terms of reducing our carbon footprint.
Anyone else? I'm looking for other ideas.
I guess with that, technologies that haven't been discussed, Lockheed Martin has done a lot of work on cold fusion and talk about having a commercial product out, I believe, by 2020. There's packaged small nuclear, that's a lot of work going on there. And I believe if there's enough funds pushed into these other types of technology, we're going to see some breakthroughs in the next 5 to 10 years.
Michael, any opinion?
Well, the LED example was an example that we were doing at one of our mines in the UK, actually, and that was no one thought of it at first, and the same response as you. They came in and these really old lights, and they did some numbers, and it was definitely an initiative that they decided to do because of the energy savings, simply put. And at the end of the day, there was also less carbon emissions, so definitely it was a nice package together.
Exco?
Yeah, some mining companies in northern Mexico are exploring the possibility to import natural gas from the U.S. Well, of course, if Trump allows that to happen, but but if it does, one of the great advantages of the energy landscape in North America is the possibility also to connect pipelines from the U.S. to Mexico, and that will allow some companies to convert their fleets of trucks to natural gas. So a lot of people is considering that movement. It's interesting, but it's also linked to this idea of having some stability on the policies. And now one of the fears is what happens if this kind of commerce of energy stops from the change of president.
And as I mentioned before, living and working in Australia, we had a carbon tax which was repealed. And one of the arguments around the repeal was that, by the Prime Minister at the time, was that
what we call high emissions trade exposed industries would actually move offshore. Do you actually think that's real?
You hear that a lot. Sorry, I jumped on that question. You hear that a lot, especially in certain newspapers, especially these days in Canada. And I've always asked the question, where have you seen any companies leave California, for example? California has a carbon market for the last 6 years or so. Ontario plans on joining Quebec and California, the markets. And I'm curious to hear real examples of companies leaving, industries leaving California and Quebec. I don't know of any. Maybe, and of course, leave them because of the cost of carbon. The same story happened in the EU. Of course, that's why those free allowances exist. As I mentioned at the start, they're there to protect carbon leakage. So there are mechanisms in place to protect those industries. But I haven't seen myself any companies, let alone industries, leaving these jurisdictions under cap and trade.
Anyone else, an opinion?
I was just going to mention, we had one in Timmins, a smelter that, before carbon obviously, but part of the reason they left the province was the high cost of energy. With carbon coming in, that would exacerbate that even more, right?
Yeah, I've certainly seen that more in aluminium smelting. We are obviously very exposed to the cost of energy, but I think it's much more complicated than just the energy price. Is there a competitive advantage in your minds to dealing with carbon early into your operations, and what might that advantage be? Let's start with you, Michael.
I think centralizing your sites, centralizing your understanding of carbon. One thing we're always surprised to see when we visit our clients is just where the responsibility of carbon's lying within the company. So emissions tend to be with the environmental person. But when it comes to carbon pricing, you need to move away from just that. It involves the energy manager, it involves the finance team, it involves the credit department, it involves the legal team, and all these people, all these departments need to be working together to understand how to deal with carbon and how to buy carbon, how to sell carbon. So being able to understand that and not have to react at the last minute when you have to buy or sell, and knowing the market, I think, is very, very important. So in that sense, being an early mover will definitely help.
It's sort of a double-edged sword, isn't it? Early moving often exposes you to more risk. What do you think, George?
Well, I think that's all of that is right on. The situation we have in Ontario, Canada is January 1st this year, cap and trade starts in Ontario. We still have lots of questions on how this is going to work. So is it too soon?
What do you think is going to happen?
I think there's going to be confusion, mistakes. As a result, there'll be some backpedaling potentially and some changes as we work through it. But there's going to be some pain potentially before all that's streamlined.
I'm certain there will be.
And Frank, do you think there's I think obviously you think there's some sort of advantage. Newmont's doing it.
Yeah, I think just like Seco mentioned that certainly the shareholders see value in it, and we value it as a corporation.
And that's demonstrable? Bit hard?
I think you certainly get the questions, has been stated. But to get to Michael's point about centralizing that, we have centralized it, but the regions still have basically the right to operate autonomously to make their own decisions, but they need the help.
Yep.
And actually, I think as a corporation, we're finding that we need help understanding all of the various issues that surround the different carbon schemes. And so I've shown how we're going to plan projects, but coming up with the dollar amount of the cost of a particular project or the savings associated with it is very difficult. And within the company in our business planning, there's a lack of confidence that we know how to do it. So we would be looking to organizations and attendees here to help us to come up with reliable numbers.
So often, in my experience, dealing with carbon risk is labyrinthine. You've got state-based programs, you've got national-based programs, you've got global programs. Do you think it's all too hard? How could it be made simpler? Should it be made simpler? These are the big questions.
I don't think there's any one person or organization responsible for that mess. So I think we can't put the blame on anyone. So I think it's just being aware of what those different regimes are, different jurisdictional issues are, and taking advantage of them. I think there's many opportunities there to transfer different opportunities from who needs what from where, and offsets are a very good example, again, not just from a price benefit, from a cost effectiveness benefit, but you can also sell a nice story in your CSR report that you've done a nice offset project in South America somewhere, or in Africa somewhere, or in Asia somewhere, and that we see a lot of that, and getting on the ground, getting involved in an offset project, and appeasing and making the NGOs happy, and those people seeing what you're doing on the ground. I think that's definitely something that mining companies can get into as well, and really highlight, very good projects that they're working on.
And Exequal, do you think responding to carbon risk is complex in your business?
It is complex, yes, because there are many issues going on with the mining industry, a lot of risks, challenges, social acceptability, commodity
Competitiveness.
prices. Even to get access to your board to discuss this is complex. So it goes with many issues that the industry faces. But of course, when you operate, for instance, in Mexico, where the country is preparing to begin a market in 2018, you have a good case to start preparing the transition to this market. At least understand what the government is doing, what are the examples that it is taking, and try to learn in preparation for this market. So that's perhaps a good incentive to get prepared before this kind of regulation begins.
I only have two more questions, but this first one's probably a little bit left field. Should miners be concerned about the impacts of carbon on their own clients? So if you're an iron ore miner, potentially the steel industry could be quite heavily impacted by restrictions on carbon emissions. So is that something that's in miners' minds, and if not, should it be? Who'd like to start? Frank, any opinion?
Well, we're primarily a gold mining company, so 70% of gold goes to jewelry and to wealth.
So not a big deal there.
Not sure that we're that concerned about it.
Exequal?
It's an interesting question because Fresnillo produces silver, is one of the lead producers of silver in the world. And it's always interesting to see whether your stakeholders will pay more for a commodity that has more responsibility behind it from an environmental or social perspective. We are not certain when this is going to happen, but at least we know that the riskier you are in terms of your social or environmental performance, it reduces the attractiveness of your shares in the markets. So maybe it is not moved by this idea of more demanding stakeholders, but perhaps more risk-averse investors in terms of performance.
Michael, do you think miners should be considering their clients?
I think it comes back to the issue of lobbying. I think I mentioned early on the steel industry and the cement industry in the EU and the other free allowances, that came down to strong lobbying. And what I'm trying to say here is maybe joining forces with those industries that you're working with to lobby to make sure you're both protected by any potential carbon leakage. At the same time, again, going back to opportunities, there's potentially maybe ways of you trading with them. A mining company may be long allowances, the other industry may be short. There's a new revenue stream or a new trade between the two of you that can exist, and you can build relationships on that as well.
George? Comment?
Well, similar to Frank, we produce diamonds, so most of that goes into jewelry. But
A lot of carbon in diamonds, apart from the diamonds themselves.
it's kind of ironic. We're selling carbon, so I don't know if a low carbon produced diamond would have a higher value or not.
All right, my last question, and this is a bit of forward thinking. I'm going to ask each of you what you think this carbon risk world will look like in 5 and 10 years out. So let me start with Frank. What's your opinion?
So we're 13 years away from 2030. I think, as a corporation, we're looking at, we need to be prepared for global targets. And I think in order to be successful as a corporation, in order to get social acceptance from both the communities we live in and the investors, we have to be prepared to demonstrate that we're doing our share to lower greenhouse gas emissions and to reduce our carbon footprint.
Exequil, 5, 10 years out.
I think what we see with climate change, it's going to have effects also on water. So all the initiatives that mining companies have to be efficient in terms of water, energy efficiency to reduce the carbon footprint, social acceptability, and what has mentioned a couple of examples of finding suppliers in the community, developing the communities, partnering with the communities. All those aspects will be more valuable, and altogether will improve or protect the resilience of the industry. Not just a single factor, but a portfolio of factors.
That's an interesting word, resilience. I like that word. Michael?
I think carbon pricing is here to stay. I think in that time frame, I don't believe there'll be one carbon price globally, but I do expect there will be more and more linked markets and more countries trading amongst each other on carbon. No doubt about that. And Switzerland was a big shock to the carbon market, thinking about joining Ontario and Quebec, and you'll see more and more of this as we go forward.
I guess the trick is what's a tonne of carbon dioxide equivalent worth in 2030? Anyone's guess.
Again, I think it's impossible to put a price on carbon globally. There'll be a price on carbon by jurisdiction. I think that's important to understand. I think that's the challenge as well for different companies. The price of carbon, you can't use the same price across the board. I think that's clear.
George?
Well, we're going to have it, and we'll work through and come up with some method of dealing with it. My concern is whether what we're doing is too slow. We've heard a lot of good things, good presentations this morning, but in reality, there is an impact on the planet. I'm optimistic that we're going to have some new breakthroughs that are going to be a bigger step change, especially in mining. There's some high energy usage in mining that there isn't an alternative technology for. That's where we really need to be focusing R&D from a mining point of view.
Yeah, and that challenge came out pretty clear this morning, I think, that they're looking for innovation there. Okay, we're probably on time. Yes, we're on time. So unfortunately, we don't have time for questions from the floor, but I'm sure the panellists will take questions after the session. Can we please thank the panel for their time?